Hello, everybody. This is Joshua Hayes here with the January 22nd stock market wrap up for you to use Friday or to watch all weekend long for you to use up on the upcoming next week session. Let's start here with the S&P 500, and what I want to show you is it was another down day today. And intraday at one point it looked very ugly, but once again there was some semblance of support intraday, and the 500 along with the Dow Jones Industrial Average is we're turning to right now, as you can see with the little tail here on the Thursday session on the 22nd, along with the NASDAQ right here, as you can see, kind of in the middle. Excuse me, everybody. So kind of in the middle of the range right there, kind of not bullish but not bearish either, just more of the basically going nowhere. And as like I've said before, since around 1027, let me get up to 1027. Now the market is down negative 2% since then, but I bet you I can find it going back out here more now. So now we're getting closer. So now we're getting more of a movement, as you can see. So from 1027 to now, it's down 2%. So overall, kind of going nowhere, but now the trend is down intermediate term, unless I can get it close here. There we go, down 1% since November. So as you can see here, in 2 months, it's gone nowhere from 1118 and 1117. It's just not moving. So in 2 months, the market's overall flat. And that's why today, neither bullish nor bearish. However, I got to admit, I would consider it a bearish session for one reason. We had the breakdown on Wednesday, followed by the two heavy volume reversals on Thursday and Friday that seemed like, oh, market might find some support with those November lows. I mean, since the November lows, we've had a lot of tails, bullish tails here, that look like it's trying to hammer out a bottom, and a lot of open body charts where we open near the low, close near the high. Those are bullish candlestick patterns. And even after Tuesday, we had a huge sell-off. Even though volume was lower, the 5.8% drop and 6% drop on the New York Stock Exchange was, oh, great, here we go. We're going back lower. But boom, we reversed yesterday, and then we got the 4.6% up day on higher volume on the NASDAQ and even higher volume on the New York Stock Exchange. So it kind of looked like the market, okay, was going to find support here, and we are going to get a short-term bounce. However, there was an important thing that happened yesterday. I took 7 new longs off the 120 breakdown in the market. I had 7 new shorts. And then after the 4.6% update on the 21st yesterday, all 7 shorts were still shorts. None of them told me, get out of it. Wrong time to go short, get out. Said they all held on, and today, no bounce. Instead, we're down 2.7%. That means in 2 days, we're only up 1.7%, and in 3 days, still down 4% on the NASDAQ, on the New York Stock Exchange down 4%, and on the Dow Jones Industrial Average, we're even down 1.9%. So overall, the trend is still down. There was a nice intraday reversal, but still we closed lower. Volume was higher on the Dow Jones. That's a distribution day. On the 500, volume was lower, and on the NASDAQ, volume was higher. So NASDAQ distribution day, getting rid of, like the open yesterday was 1466 and we closed at 1465. So we closed lower than where we opened. So we can kill yesterday's gains on higher volume. Distribution on NASDAQ, distribution on Dow Jones Industrial Average. Yesterday, despite the S&P 500 reversing on higher volume, all 7 shorts, which most of them came from the New York Stock Exchange, S&P 500, and NYSE uses the same volume. They still maintain their short positions. Today, we have gains. How many full covers do we have? 0. How many partial covers? 2. Any of them in our new shorts? Nope. So 7 new shorts, 7 are working. Also, we took 2 new longs recently. Both of them, they held in. So we're doing good on our 5 longs. They're not giving us full sell signals. Some are going up, telling us that we're even doing it right, even on the other end of the market, even though it's going down. And then we had 35 shorts. 34 of 35 went down the 6% day, while we also took 7 new ones. The up day, none of them were covers, and here we are. They're all working again. So 42 shorts, 38 of them down, which means we made money on 38 of them. So we're obviously on the right side of the market with the downtrend below the 50-day moving average in the NYSE and NASDAQ, with the 50-day moving average in a downtrend. As you see, NYSE, there's the NASDAQ. And I want to show you from the highs in 2009 where I heard a lot of people complaining that they were upset that they missed the November to January move, which was 23% move. Well, I like to tell you it. During most 23% moves in the stock market, I will have leading stocks with either beautiful chart patterns, which means they have max green bop and heavy accumulation, or can slim stocks like DRYS back in October of 2007 that went up 100% in 2 months. We get stocks like that during these 23% moves. You'll get a leader up to 100%. However, during this last short-term rally, we didn't have any leaders. Why? Low volume on the indexes. The only heavy volume was a quadruple witching day. So basically the whole the uptrend was on low volume. And no leaders even moved up. So since the highs, even if you miss 23 uptrend and you're like, that's it, I'm getting long now because I'm not going to miss any more of the uptrend. You're now down 11% in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So way to chase a market that wasn't to be chased. So I hope everybody's listening to your charts. And if you're not listening to the charts, I hope you're listening to William O'Neill of Investors Business Daily, or listening to me of BigWaveTrading.com, or listening to somebody who is saying, don't be long this market because it's below the 250-day moving average. When it's above the 250-day moving average, like it was from 2003 to 2007, you get long. From the 2002 lows and the 2007 highs, 141% on the NASDAQ. We had plenty of stocks up 2,000% in 2003. We had plenty of stocks up 300% in 2004, 2005, and plenty of stocks in 2006 up over 100%. And we had a few stocks in 2007 up over 50%. And in early 2008, we had some good stocks that one gave us over 200% and one gave us over 50%, which wasn't a lot, but still there was at least something. Now we have nothing. And just like from 2000 to 2002, even though there were some uptrends during that time, and we could make money on stocks like GNSS, CRUS, Airtran, which I think was AIRT then. I can't quite remember or whatever because I don't even know if that exists now. Yeah, it does, and there it was. Yeah, so, I mean, maybe. No, that wasn't it. Whatever. You can look at my past big winners from 2000, 2002 and see that there were some. Right now, though, there are none. And look at how deep the weekly, look at a weekly. We got a death cross on the 5,200-day weekly, and we haven't had that since 2001, and that didn't recross till 2004, which shows you why you shouldn't look at the weekly 50 and 200-day moving average. So I pay attention to the daily. The daily death crossed in January for the first time, and so if you took that signal whenever it death crossed there, you would have avoided a 38% loss. And I know a lot of you are down for 2008. Let's see how much time we have left. Okay, so let's look at the commodities really quick. Oil down 2% today, down to 43. I thought I saw it go down to 40. That might be the old contract. I'm not that big into futures. I just follow the overall trend, and the overall trend, clearly, if you can read a chart, is down. Short term, it's up, but not for much longer. And I mean, it's only coming from the 40 area where it's about at now, so whatever. Let's look at platinum. Platinum up 33%, 0.33% today, haha. And as you can see, another bullish tail intraday, holding above the 50. So, still looking good for platinum. Silver, ticking higher. Another bullish tail, hammering out those lows. A lot of open bars. Since taking out the 50-day moving average, silver is up 11%. If you use margin, or futures and margin, you know, you did pretty well there. Gold up 0.25%. What do you see again today? Another bullish tail. Besides a bullish tail, what else do you have? An open candlestick bar. So from the time it took the 200-day moving average forcefully, you still have a 5% gain on your margin, and it's good enough. Gold's looking good. Gold's good. But most importantly, how does the dollar look? How does the dollar look? This is very important for all of us that is in cash. Today was not a good day. Now, since the bottom here on the 200-day moving average, we've only had one shooting star pattern that was bearish, and it even closed higher than the open. This time, though, it closed barely higher than the open. So it was barely okay. But it came very close to being a shooting star, and not pretty. But so far, the dollar's still up. And if you're long the dollar from the time it took out July on margin, you have a 17% gain on whatever you have. So I'm going to go and wrap it up there. We've been on the right side of the market. We're continuing to do well. Our shorts are making us money. Our longs aren't, but they're not hurting us a whole lot. However, to have 7 longs in this ugly market and to have 7 longs holding in there, we still have good chart patterns. One of our pretty chart patterns that went not pretty yesterday has got green bop again and had a bullish tail in it. So hopefully it can return back with this max green bop, heavy accumulation, and go on to hit new highs and make us some money on the long side while we make money on the short side. You know, guys, we're doing really well out there, and I hope you guys are all very thankful for this. Not to me, but to the charts, proving that charts work. I'm just helping you learn how to use them. God bless you, everybody. Aloha, and let's go get them tomorrow, and hopefully we can start making some big money on the short side.